Good morning, Steve Free in Chicago with the morning grain comments. We have a mixed grain trade overnight. March beans are down about 18 cents. March corn's up 6 cents, while wheat's anywhere from 6 cents up in Minneapolis to 13 cents here in Kansas City. Stock market looks like it's going to open higher. The dollar is lower. Crude is lower, although natural gas is up. And you got gold, silver, copper, coffee, cocoa, sugar, and cotton all lower. The beans are down because of some good rains that fell across central Argentina over the weekend. The good news for the bears, now they're going to go 10 days without rain, and we'll see if we need to take additional weather premium out of the bean market, or do we add a little bit back. The end of the 10-day match, the ensemble shows a chance of rain in Argentina. Again, Brazil weather is okay, U.S. weather is the same, except when we start getting out into day 6 through day 14, it's going to be a lot colder than normal. Temperatures in Iowa might drop below 0, and so we'll be watching that pretty closely and how it impacts logistics and animal feed and also running of the crushing plants. We also note next couple of days we're going to have quite the snow blizzard up in the Dakotas, 16 to 18 inches of blowing snow up there. Probably going to stop things logistically for a while. In the corn and wheat, there was bombing over the weekend of the Odessa port. 1.7 million people in Odessa do not have power, and there's no power to the grain export elevators. So that might be putting a little bit of premium back into the corn and wheat market at recent lows. We also note that there's not a lot of rain in the forecast for the southern plains into the end of the year. So some people are saying that wheat might be a little undervalued given the fact that in 2023, the stocks to usage ratio of major exporters is likely to decline from this year. We're also seeing a little bit of a pickup in export demand. Algeria, Morocco, Egypt, all those countries are looking to buy some wheat. We also note that there is talk that both Russia and Ukraine may have lowered wheat acres for next year, which could lower the production. But right now, the wheat market made new lows last week on the fact that Russia's prices are cheaper, and they continue to get most of the export demand versus other countries, especially here in the United States. Soft wheat is now cheaper than French wheat, but hard wheat is still more expensive than German wheat, and also both are above Russian wheat. So basically, outside markets waiting for the Fed action both here and in Europe, raising interest rates 50 basis points, and also the fact that China had loosened some of its restrictions on COVID, now is seeing increasing cases. And does that mean less imports of raw materials? As always, these are my thoughts and not those of ADM Investor Services or ADM. Have a safe and profitable trading day.